Hello, my name's David Miller and I'm the manager of Nexus Global Solutions Portfolio and the co-manager of Dynamic. It's May, London, and we're getting through this year in reasonable shape. April was a really good month for investors. Solutions was up about 2.5%, Dynamic over 4%, and that's made up for a lot of the ground lost in the previous month. And I think the big question is, why is there this volatility? So let me just take you back to the beginning of the year very briefly. In January, things looked good. Optimism was abound. Markets had a really good start to the year. And then in February, concerns started to build that, in fact, perhaps this was too much of a good thing, that might lead to inflation and higher interest rates. Then in March, concerns started to gather that there might not be enough growth. Bear with me on all of this. And then finally in April, we were able to look at real numbers generated by the companies that we're actually investing in. And I just want to emphasize this. We're not investing in headlines, we're not investing in governments. We're not actually investing in GDP statistics, we're investing in the companies, broadly speaking, that are making profits, that pay dividends. And when they tell us things, as they have been doing this month, that's what matters. And the news from the corporate world has been good. US results, for example, on average, companies are reporting 21% higher earnings this year than last year. This is fantastic news. Where's that coming from? Across the board, Middle America, as well as the well-publicized technology sector. And to be honest, the FANGs, Facebook, Amazon, Apple, Netflix, Google, fantastic results. Amazon, for example, reporting revenue of 60-odd% higher than the previous year. These are extraordinary numbers, and the portfolios are invested in these companies. This is what is known as investing in success, because they're successful whilst others are not. They are taking profits from other parts of the sectors in which they operate. And we as investors have to get involved in these companies that are growing, and that's what we're trying to do. And the news has been good. That's what we're investing in. At an asset allocation level, not much change. Dynamic, which is the equity portfolio, is 96% invested with just a few percent in cash. Solutions, the more diversified approach, is less than 30% in cash and bonds now, 57% in equities, and the rest in alternatives, hedge funds, gold, infrastructure and the like. Bonds haven't had much of a month in terms of the fixed interest markets. They're slightly concerned about the possibility of higher interest rates in the States. But it's in the US that the differences are really being made. The dollar has been stronger, and that's having a knock-on effect around the world. I mentioned the technology companies that are doing well. The oil sector is also having a good run. We've got our exposure pretty well sorted out there, Chevron and others. Then in Europe, and this is the other side of every investment coin, if the dollar's been strong, the euro has been weak. And so it's the manufacturers that we've been focusing on. Siemens, Schneider, Airbus. These companies are doing well because they're becoming more competitive globally because of currency fluctuations. All of these things go into the mix. Then in the UK, which makes up part of the portfolio, concerns about Brexit, absolutely. But the pound's been weaker, takeovers are happening, foreign investors are coming into the UK and buying corporate UK because it looks cheap. And we make investments on the basis of good valuation, cheap valuations, and that we can still see plenty of value in the UK as well. So I think that's the point, is the difference between the headlines and the reality of being in business, and we're investing in business on your behalf. So that's where we are after 4 full months and another few days of 2018. What happens next? Well, a month ago I said that what I would be focusing on were the numbers. The numbers matter much more than the words. And we've got more numbers to come through which we will continue to analyse on a case-by-case basis. And at the moment it's showing steady economic growth in all parts of the world, inflation under control, corporate profits coming through very nicely, with winners and losers. And our job is to make sure that we're invested in enough winners to make a good return for unit holders. So that's where we are now, and I look forward to reporting to you in another month's time. Thank you.